Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index rebounded from last week's low of 97.83 and moved back above 98.00 as markets weighed Middle East uncertainty against resilient US economic data. Even though Trump said the conflict is nearing an end and negotiations may resume, neither Washington nor Tehran has confirmed any extension of the ceasefire. That leaves safe haven flows in wait-and-see mode. WTI crude plunged more than 7% last week, falling below $79 and hitting its lowest level in nearly 5 weeks. The sell-off accelerated after Iran's foreign minister said the Strait of Hormuz had reopened to commercial shipping during the ceasefire period, that eased fears of a severe supply shock and improved market sentiment. Still, the broader backdrop remains fragile. Oil is now trading between fading geopolitical risk premium and lingering diplomatic uncertainty, so headline-driven volatility is likely to stay elevated. Spot gold held mostly above $4,700 last week after earlier touching a one-month high near $4,890. Market sentiment has improved notably from the weakness seen in March, as hopes for a ceasefire and renewed US-Iran talks helped revive demand. Investors are starting to price in a scenario where easing energy prices could reduce inflation pressure and make the Fed's easing path clearer. Lower US yields and a softer dollar since early April have also created a much more supportive backdrop for gold. Despite ongoing geopolitical uncertainty, the Bank of Japan is still seen as having room to raise rates toward 1% in April, although expectations for that move have softened. For now, the bigger driver in dollar-yen remains the balance between Middle East tensions and global policy expectations. Japan's heavy dependence on rising energy costs could weigh on Japan's growth outlook, which in turn is limiting support for the yen and keeping USD/JPY biased to the upside. Euro hovered around 1.18 last week, staying close to pre-war highs as broad US dollar weakness continued to support the pair. Optimism around diplomatic efforts between the US and Iran helped reduce demand for safe haven assets and pushed oil prices lower, easing inflation concerns across Europe. That has also led traders to scale back expectations for further ECB tightening. Even so, the euro has remained resilient. Momentum has cooled slightly, but unless the pair breaks below 1.1735, the broader upside structure still looks intact.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.